Good afternoon. I'm with Vince Lancy of Goldfix for a bit of an impromptu chat about silver market dynamics. And we're also going to talk a little bit about mining stocks and something that we're collaborating on in the future. So Vince, how are you today?
I'm good. Thanks for having me on, Robert.
My pleasure. I just felt like this is an interesting moment in market time here. We've been through a lot in precious metals the last couple of months. I mean, the end of 2025, the final days of 2025 was a whirlwind. It was very intense. And then obviously silver peaked at the end of January. We've had a pretty good rollover, a pretty good smash down. And I just wanted to sort of pick your brain on the evolution of sentiment that you're seeing out there in terms of investors and sentiment and social media on silver.
Yeah, I'm getting. Well, when you get outside of our religious circle, self included, I'm starting to see. Not starting to see. I'm seeing a progression of bears come out of the woodwork, and I don't just mean the usual social media, paid bears. They seem to be paid, these guys. I'm referring to well, for example, if you look at the CTAs, the commodity trading advisors, they had been long all the way up, and between 80 and 90 they started selling. So now they're out of their longs as of 2 weeks ago. Last week they actually started getting short. Now I'm looking for reasons as to why. And the reasons are traditional. They're very reasonable for them to be short. But just to answer your question directly, small hedge funds and CTAs are now selling it, looking for a sell-off. There's no doubt about that. I mean, it's quantified. So you have small, medium, and large hedge funds, and CTAs are in the small hedge fund category, and they're getting short. It's actually shocking that they're short unless you understand the history behind how these guys think. When they're long copper and long gold, they like to sell silver. They think that it's a hedge for their copper. So, but the weird thing is they're not long gold either. So I'm seeing a large cohort, not the biggest or most important cohort, but a large cohort of traditional longs are now short. I'm also seeing probably the same things you're seeing on social media. I'm seeing people saying that's the top. I mean, look, I look at the screen and I go, shit, I'd want to sell every bounce in there now. And maybe that is a good idea. I mean, I'm not bearish, but by the same token, I can't see the market getting above 85 again for a while. What do you think? Or what are you saying, I should say?
Yeah, so I've written about it a bit on my Substack, and I think that I would prefer to see silver trading a range from 70 to 85 for at least the next few weeks, the next 2 to 3 weeks. I think that would be perfect. But I also know that what I want and what I think the market would be best to do is not really relevant to what the market is actually going to do. It's not relevant at all, actually. So I'm also wondering, how could silver throw us all for a curveball here? And then when I see these vocal bears now, right? So nobody was really, there were a couple of guys on X who were shorting silver at the end of 2025. There were a couple, but I feel like they were almost fake.
They were talking it. I don't know that they were shorting it.
Yeah, they were talking it to get their engagement up, but I really doubt that these guys were actually making the trades that they said they were. I agree with you. Right now, I think we have some authentic real shorts that are actually long puts that are short silver, the silver ETF, silver miners. They're actually betting that this is like a technical breakdown. Right, the market has broken. The market broke at the end of January.
It's 2011 all over again.
Exactly. They're betting it's going to be 2011 all over again, right? And when I see that, I'm like, man, nobody was talking about shorting silver miners back in mid-January. Everybody was long or just terrified, right? They're just like, wow, this is a freight train. And obviously, in hindsight, that was the best time to short silver miners. They got extremely overbought. But now, I think silver's had the move. It's lost it from high to low, 48%, from top tick to bottom tick. January, February, minus 48%. That's a correction. I think we had the correction already.
Right.
And now it's settling down, right? And so I wonder if we might get another week or so of consolidation, and then we get another shocking short squeeze, right? I think that would be the Max Payne sort of outcome here, right?
You do?
Yeah, I think so.
Yeah, I mean, it would be. Well, how about this? I'll just add a layer to what you're saying. For it to be the Max Payne outcome, I need someone else to sell it in the hole. And I don't think anyone sold it in the hole yet. I need someone to your point, I'd like it to trade 3 weeks to 5 weeks sideways and build a healthy base, because we had a 48% sell-off from the highs. But I want the bears to look at that chart and say, we never should have been above 85. And I want them to sell it here. And then I want the market to go to 65. And I want them to sell it again. And then I want it to turn around and just go rip higher. So I feel like we don't have any rocket fuel right now. So that, look, again, like you said, the market doesn't care what I think. But I think the ideal situation is what we're in agreement on, and that is sideways to maybe looking like a little bit of a bull flag for a little bit, making it more of a wedge would create the opportunity for people to get short and allow those longs that are trapped between 80 and 90 to get out. And once that happens, then your level goes on. But the only thing that I think might be potentially more painful would be if the market got down to 64 again in a heartbeat, and all those people that were long between 80 and 90 got out, and then people started to sell it down there. I wouldn't put it this way. I want sideways, but I would not be surprised if we have another spike lower before we go up. That's what I think.
Yeah, no, I think that's right. I think now that you said that, I think, yeah, the Max Payne outcome, the Max Payne path is probably a retest into the mid 60s that puts in place either a higher low or a double bottom, and then a quick rip back up, and sort of like a from failed moves comes fast moves, short squeeze
Right.
to the upside. But also, I think it's also worth noting that these silver miners are really volatile here, right? So the market is showing high indecision, and it's very sensitive to the day-to-day moves. I mean, when we're getting, Hecla going up or down 7 to 10% a day,
Right.
that's just showing you how uncertain like this market is right now.
Right.
And implied vol is still really elevated, right? So we kind of need to work off some of that implied vol, and some of these option speculators who are betting for either a big down move or a big up move kind of need to lose their premiums. And then, the market might eventually in March at some point be ready to show us its future path, right? And we also have China on holiday for a couple of weeks, right? So
yeah, I mean, here's where, like, you're totally right about that. Going into March, going into the end of March, call it the first week in April, you're going to have a lot of these options, but I don't think the speculators have been punished enough yet in both directions. So I need to see the options premiums drop. I like to see that. I like to see some people get punished and get stopped out of their positions. Also, you mentioned China. Look, the guy Bian Zhiming from China, he's a big speculator out there, and he has come out bearish and announced it. So while I'm seeing small American CTAs sell the market, and you're seeing social media people who actually do trade the market look like they're playing it short, there is a big short out there right now. So maybe we don't need to see it in 64. So I'm just kind of like backtracking. I guess my point is sideways bullish or bearish now? And I think sideways is bullish, and I think the bearish think sideways is bearish, and that's good. You know, I don't think anybody out there, I don't think anybody out there is looking to capture this market below 64 yet, except this one big guy. So I need more shorts to get in, and I think we'll get them if we go sideways. But to your point, the market has trapped longs above. Does it have enough trapped shorts yet? And I don't know. That's what I'm concerned about. And I want to see the options guys get killed first. That's more healthy, to your point.
Yeah, I think the options guys losing their premiums is what really clears the decks for the next move. And I agree with you. I think that as silver consolidates largely sideways in the 70s, it fills up more bearish bets. I think it attracts more bearish bets of speculators and options traders betting on the next leg lower, right? Like,
well, that's
betting,
the 2011 analogy, right? I mean,
right?
That's both. We lived through that, 2011 high market drops, and I'm hearing you describe what you're seeing, and I'm trying to think like a bear, and I'm going, he's saying the market is uncertain right now. Well, that might be the time to sell it. They probably were saying that after 2011 high. The market is uncertain now, and the market starts chopping around. And so maybe this is going to be behaviorally a repeat of 2011, where everyone will get short, but it'll be a reversal of outcome where the market will go up. That's what I think, anyway. I mean, but there is this is what I'm looking at it now in terms of the big players. I see China is now playing from the short side. They don't want this market to go up. They need to buy it industrially. I see the U.S. playing from the long side because we're buying it as a critical mineral. And I mean, I think I said this morning on the broadcast, but between 50 and 70, that's a real rally. Between 70 and 90, that could be value. Like when the last time up, the first time up to 70, China was paying 80, and they were paying it. It wasn't just a rumor. They were trying to buy it at 80 in Latin America directly. So if China's paying 80 when it's trading 70 here, then the value is 75. It's not 50. It's not 55. It's not 65. It's 75. And I'm sticking with that. And I'm saying, as long as we're not below 65, I think 75 will pull us back as an anchor. And I want that to continue to happen. I think that the market has too many longs in it. I think in the US, there are no longs left, except for the options guys. The other longs are in Asia, and they're pretty much in Shanghai. So maybe we need them to get out too. I'm not sure.
Yeah, it's very interesting. It's a very interesting market right now. Just sort of the fact that the market traded above 100 for several days, for like a week. Right. I think that now it's setting 70 as sort of a value zone. Like, you got a lot of people that saw this market is capable of going above $100 an ounce. And it might be capable of going above $120 an ounce, right? And they experienced that FOMO. And now I think they're willing to accumulate it around 70. Like that's now a value price in the market, right? So as long as that 65 to 70 support holds, if we are able to build up more bears in a consolidation where 65 to 70 holds, I think that increases the probability that the next leg higher, is coming sooner than later.
I agree. The only thing that's making me concerned is that as time goes on, will there be more silver found? I mean, in my opinion, there isn't really a shortage of silver. There's a shortage of silver refining over here, at least in the West. So I'm wondering what everyone's doing with the concentrate. Are they going to hit the market with that, or are they just going to hold it for their hoarders, the U.S. government? and I'm betting they're going to hold it. But I have to admit that I'm getting a little bit nervous seeing all the concentrate being pulled out of Latin America that hasn't hit the market yet. I'm wondering, where the hell is it? So maybe they're going to restock the LBMA. I don't know. But that's the only thing that worries me, because time does give us an opportunity to get more silver. So I think that's why price matters. Above 65, I'm okay. Above 70, I'm really okay. And above 75, I'm fine. Like right now, my position reflects exactly what you said. I'm short options in butterfly form. So I'm short. If the market stays between 70 and 85, I'll do very well. The market goes below 60, you'll have to carry me out on a stretcher. If the market goes up to 90, you won't have to carry me out on a stretcher, but I'll have to panic a little bit to get bullish again. So that's where I am right now. I'm betting on sideways.
Got it. Okay. So we're in the same camp. So that means we're definitely wrong.
Definitely wrong. Yeah, exactly.
Well, let's see how it plays out, Vince. It's also interesting. We got this news that Wheaton Precious Metals signed a silver streaming deal with BHP, the world's largest mining company, and it's basically sort of it's a byproduct,
Right.
At the Antamina mine in South America. And for BHP, silver is sort of a non-core metal that they produce at several of their.
It just lowers their cost basis.
Right. It lowers their all-in cost of their main product, which is usually copper, right? And we know why they did it, right? The mining company is building a big copper mine. You can call it a district in Argentina, and the initial capex for that project is above $7 billion, right? So it just frees up some balance sheet, flexibility for the miner. For Wheaton, it's interesting because what I view this transaction as, it's the first real, acknowledgement and acceptance of $75 an ounce silver. So here we have a real financial transaction in the world between two very large companies. And basically the strike price on the deal is roughly $75 an ounce, silver, right? So in my mind, that's actually bullish for silver, that, a major royalty company was willing to put up $4.3 billion in cash today, basically with a strike price on their silver stream of 75. They could look like geniuses if silver is 150 2 or 3 years from now. They could look like heroes, right? They could also look like they top tick the market if silver is back to $40 in 2027, right? So it's interesting to me. I mean, obviously, look, there's two parties to the deal. Both have their own motivations. I don't think for the mining company, it's exactly a market call. They're not making a bearish silver call. They're making a call. They're bullish on copper, and they want to make more investments, in their copper pipeline. I'm kind of interested in your thoughts on that and how you view it.
Well, in the context of everything else that we were talking about, I think the first thing, I think, just to restate your point about is BHP bearish and is Wheaton bullish? Well, BHP is not bearish. They're just getting rid of the silver as part of their business. They're monetizing waste so they can finance their project in Argentina, heap leaching and what have you. Whereas Wheaton has to be a little bit more market price sensitive. So they're the ones who have the risk. And the question is, do we like the management there? And I think the answer is yes. And if that's the case, then we think it's a good idea. Now, what I'll add to that is, JP Morgan has been, I don't have data to show this. I just have this anecdotal evidence that JP Morgan has been the bank, among other banks, importing silver concentrate from Latin America. And in doing that, I study their commitment of traders reports, and the bank has pretty much flipped positive and gotten long silver again in the 70 to 75 range. So I see two big players saying that's price. So I think 75 could be a base, but I'm looking at it to be value. That's why I'm just saying 70 to 75 is value, but it would be nice to base in that range for a long time. And your observation about Wheaton, I think adds a lot of credence to that. Had the Wheaton deal not gone through, maybe we wouldn't be having this conversation.
Yeah, and it's also notable the size of this deal, right? Like in the gold and silver royalty and streaming space, this is about as big as it gets, right? For like 4.3 billion. And by the way, it's not all the silver this mine, generates, right? There's a lot more on top of this small portion that, Wheaton acquired, right? So
Right.
it's very interesting. It's a big deal. I mean, I talked to some people on Monday night, and they were really impressed by the size of this deal. They were blown away. And most people view it as, for Wheaton, basically the long, they think they paid a big price for it, right? It was an expensive deal, right? But again, if silver is above 100, if silver is 150, they're going to look very, very, very smart. And I guess that's they need more silver exposure. It's their business to get more silver exposure.
Well, you mentioned that off the air. You mentioned that off the air. You said when we're talking about this, you said they need to show their shareholders that they need business.
Yeah.
And what does it better than this?
Exactly. Right. So it satiates their investor base.
Right.
So I want to ask you about tokenized gold and Tether Gold, because this, I think, in a way, this is transforming the gold investment space, and I wonder when we're going to get Tether Silver. Just tell us about Tether Gold and why tokenized gold might be the future.
Yeah, I mean, first of all, the tokenized gold, or the blockchain gold, however you want to call it, is really just a new ETF product. Let's just call it what it is. And from my point of view, it's a new way to own gold through an ETF type of product. The thing is, there's an assurance with this new product that the gold can't be rehypothecated. And that's going to be true for some time. Not forever, but it will be true for some time. So getting the negatives out of the way. The positives are you have a new product. You have new wrapping paper on an old product. And now you're saying you can buy 1 ounce of gold tokenized and not have to worry about shipping or transfer. And so this is going to function. I mean, there's a lot that I could say to it, but just to put it out there in simple terms, this is like an IPO for gold. This is like when gold was sold at Costco, you can go in and buy some gold now. And so people went in and they bought some gold because it was on display. It's a point of sale deal. Now you can go in and you can say, well, I think I want a money market, but I want my interest to be paid in gold. You could start doing that. That's going to start happening. And so naturally, if you have it on display, people are going to start buying it, even if it's not a lot. So this is, in effect, as far as I'm concerned, an IPO. Now, if you're a stacker, which I am, not a pure stacker, but I'm a stacker, you're saying, oh, but it's not real. I don't care that it's not real. If you don't think it's real, I don't care. What I care about is that the normal people who don't stack are going to use it, and they're going to buy it. And it's going to, ETFs aren't real, but if it wasn't for ETFs, we probably wouldn't have the run-up that we've had, because they raise awareness. Between COVID, between the printing, between the Ukraine war, and between this technology, we're looking at a decentralization of ownership of gold that's actually creating an environment that allows you to have your own gold standard, provided you don't actually need the gold delivered to you. But I think I want to just say it's a new era. It's a new era. Everything in look, these people that understand blockchain that want to use it, they want to blockchain and tokenize everything. They want to tokenize the air you breathe. They want to tokenize real estate in India. They want to say, real estate in India, I'm going to attach a token to it and sell land on tea farming to Americans in Iowa. That type of shit. They want to do that. And they want to do that on a retail one-to-one basis. That's why gold is being number one. Gold is being number one because it's the most important asset or the easiest asset to do it with. It doesn't fluctuate, it doesn't get consumed, and therefore it's going to happen that way, which brings me to silver. So it's an IPO for gold. That's how I look at it. You know, I'm not giving you targets, but, you know, 10,000, 20,000, who cares? It's going to go up for like the next 5 years. I don't care. It's just going to go up because everyone wants it now. It's kind of like the first year after Bitcoin came out as an ETF or whatever it is, IBIT, the grayscale ETF, which brings me to silver. I would love them to do that with silver as a bull, but I don't think you could do that with a critical mineral. If they do it, it's crazy, but they could do it. I don't think they should do it. But here's the thing. If the US doesn't do it, other countries will. The word is in the Middle East, Qatar and Dubai and India and someone else are working together to create your dream, or our dream, I should say, tokenized silver. And so it's going to happen, but it just might not happen over here.
Yeah, it's going to happen. You know, it's inevitable. You can bet on it for sure. I think that's an excellent point, that like financialized gold, the GLD, you know, the SLV, financialized silver, Tether Gold, soon to come Tether Silver. These make precious metals much more accessible to the masses. And for sure, silver would not have hit 121 in January if you could not buy the SLV in, you know, like an E-Trade brokerage account. Like, it just, not everybody is about going to a bullion dealer or sending wire transfers and having an armed guard drop off a bar at your house, right? Like not everybody's about that.
Right. Stackers don't have FOMO. Normal people have FOMO. Stackers are more resilient and more stubborn, but FOMO is designed for its ease of use. I can get money out of the ATM anytime I want. Well, I always have money because of that. I can buy SLV on a brokerage account anytime I want, so I'm going to do that. And China was the classic example that those guys were driving the value of an ETF, not an ETF, but a listed open-end fund on the exchange in LOF to levels like 30% above NAV. So there's the power of stupidity, for lack of a better word. You know, like there isn't enough product in China, and so they all piled 2 tons into a 1-ton, you know, pickup truck, and they pushed it out of its portion. Now I think what you're going to have is you're going to have these new products are going to accommodate it, and at the same time, you're going to have a raised awareness. So the metals will just continue, I think, to benefit from this raised awareness, this secular awareness that's coming with decentralized technology.
So before we wrap up, Vince, something that we've been talking about for the last couple of weeks is just like, I've been getting a lot of inbounds from friends and acquaintances about mining stocks. And I know you get a lot of inbounds about mining stocks. It's natural for gold and silver investors, for investors who own physical or own the ETFs, to get interested in mining stocks. I think, quite frankly, it's the gateway drug, and we all kind of went a very similar path. We were gold investors first, typically, and then we became, you know, shareholders in mining companies. At least that was my path, right? And so we're gonna work together on, you know, an episode or 2 that's gonna focus on the miners, and we're gonna also field some questions from our subscribers and go through some of the basics of investing in the mining sector, some basic knowledge that I think everybody who owns mining stocks or who is interested in owning mining stocks should know. And this will probably be a 2-part series.
Yeah.
It's going to be at least an hour, probably 2 hours in total, because I know that we can talk a lot about these things. And hopefully it'll be valuable. It'll be value added for people who tune
Oh
into
yeah.
it, and it will be for our premium, subscribers.
And I know that my people will get something out of it, and that's because I started in the financial world as a fundamental analyst, and I used to cover miners. So, but those muscles have gotten rusty for me, and so I've been talking to you and a couple others and reaching out, and that's the idea. Is I have subscribers that are very plugged in from a macro, from a secular, from a trading point of view, and while I cover miners, I don't give them the love that I should give them. And I think the best way to do that is to bring someone who adds value to the mining industry towards them. And I think that's something I want to do. Plus, come up with a portfolio idea for my own stuff. Because I will say this: I've been saying this for a couple months, and we still have time. But with gold at $5,000 and silver at $77 or $75 or whatever it is, miners are ridiculously undervalued, and maybe that'll stay that way for another year or two, but it won't stay that way for another 5 years. If you're investing now, you're investing in miners. You're buying gold, but you're investing in miners. So I want to be better prepared for that as I take bullion profits, which I haven't yet. I've taken money off the table for silver, but I'm getting back in as we talk.
Yeah, and it's also very important to point out that 2025 was an incredible year for gold miners, for silver miners, for the mining sector more generally. A lot of stocks appreciated 200-300%, some more than that. But now there's a transition, right? We're transitioning a bit. The larger companies, the Newmonts, the Barricks, the Heclas, they are now overflowing with cash. They've right-sized their balance sheets, they've paid down debt, they've dropped down their leverage ratios. They're spitting out free cash flow, hundreds of millions of dollars or billions of dollars a quarter. And now they're like, oh, we're going to need to make some acquisitions. We need to make some investments in growth, or else we're not going to have growth, right? And most speculators, most investors buy a mining stock for growth. They want to see them grow from 3 million ounces a year to 4 million ounces a year to 5 million ounces a year. That's a lot easier said than done, right? And so generally, the organic growth is very challenging and very slow in precious metals mining. And so now we're at the stage of the cycle where a lot of it's going to be through M&A, right? So there's going to be deals made in 2026. And I have a bunch of ideas that we're going to talk about on some of these targets.
Good, because I believe, to your point, I know from my knowledge of mining and fundamental analysis that one of the keys to the senior miners, the Heclas and the Newmonts making money, is they have operating leverage. And operating leverage, you throw another tractor at it, you pull more gold out of the ground. But the problem is you can't pull more gold out of the ground. You can't pump gold out of the ground like you pump oil out of the ground. And so they will have to do more acquisitions. And I believe that the industry is going to vertically roll up. The big ones are going to buy the little ones with their free cash flow. Otherwise, look, if I'm a Newmont, if I'm a Newmont, not the Newmont, but if I'm a Newmont and I have all this extra free cash flow, well, either I'm going to have a big dividend, I'm going to have to buy someone, or I'm going to have to do a spinoff of some sort. And depending on the culture, you're going to have buyouts, and you're going to have stock buybacks, and you're going to have one-time dividends. So I think for me, the mining sector play is going to be what I call a barbell trade. I want to own the Newmont for the dividend potential and the acquisition. And then I want to own the really small guy at the other end of the barbell for the takeover potential. So those are my trades. I want the big guy and the tiny guy. I actually am overlooking the middle guys right now, but I don't have enough people on my list for me to be satisfied yet. But that's what I want to cover with you.
Good. I'm really looking forward to it, and I have a bunch of ideas too, both in the small, the explorers, the juniors, and in the senior producers as well. and the mid tiers. I think the mid tiers are going to be what sort of forces the M&A cycle to accelerate, and I think we're already starting to see that. So we'll get into that. Vince Lancy, thank you so much for your time, and I look forward to speaking again very soon.
Thank you, Robert. Talk to you soon.